All right, then lots of news coming in from the technology and the startup world, but let's put our spotlight on Elev8 Venture Partners. It's a growth stage investor, and it's marked the final close of its maiden fund at 1,400 crore rupees or $160 million. Now, this is essentially about 20% below its initial $200 million target. It was launched in 2023. The company, in fact, the Bengaluru-based fund, has already deployed one-third of the corpus into startups like Astrotalks, Edify, Small Case, Porter and Snapmint, amongst others. And of course, they have check sizes ranging from $8 to $14 million. The fund was anchored by South Korea's KB Investment, and it plans to deploy the remaining capital over the next 12 to 18 months across Fintech, SaaS, B2B platforms, along with consumer brands as well. And it's targeting its full deployment by 2026-27. So let's get in a word now and bring on board Naveen Honagudi, who's the founder of Elev8 Venture Partners. Thanks very much, Naveen, for taking the time out and speaking to us here on ET Now. Talking about the fund, how do you plan to deploy this fund? How much of this has already been deployed? Give us a sense of that. And which sectors are looking promising to you at the moment?
Yeah, thank you so much, Sumita, for having me over the show. So we look to invest in about 12 to 14 companies from the fund, with an average ticket size, as you mentioned, anywhere between 8 to 14 billion, close to about 100 crores per company. We've invested in about 5 companies so far that you can see on your screen. So roughly one-third of the capital is deployed. The balance two-third capital we'd look to deploy in about 7 to 9 companies over the next 18 months. Talking about which spaces that we'll be looking to invest in, broadly 3 sectors we'll focus our investment on. First is consumer internet and consumer enablers. Second is financial services but technology enabled, so fintech. And third is B2B, which includes enterprise software, B2B commerce, and areas like that.
All right. Thanks very much for your opening remarks, Naveen. Let's also get in a word from you on the overall target. In fact, this fund was initially targeted at $200 million. Why is this smaller than was initially targeted and planned? And was it to do with the need to adjust according to investor strategy?
So the initial PPM that we had filed with SEBI was for about 1,000 crore fund size, base fund, and plus a green shoe. So we have overshot our base fund of about 1,000 crores by 40%, so close to 400 crores. This helps us get to the sort of check sizes that we would want to per company. So as I said, about 100 crores and about 12 to 14 investments. Which has been the focus for us since day one, and get to the kind of stake and rights that we would want to in each of these portfolio companies, right? So that's one. Besides that, given our LP base, which includes not only institutions and families from India, but significant amount of capital globally as well, including Asia and US, this gives us the ability of writing significantly higher check sizes in a company along with our co-investors, right? So in one of the companies that we've deployed capital recently, we went as high as up to 250 crores in that particular investment. So we feel this capital base gives us a good shot at investing into companies with a meaningful ownership and not limiting us from companies which need 200 to 250 crores of capital.
All right. So expansion into consumer sectors and, of course, fintech is essentially what you're looking at. But amidst the kind of investments that you have made, not just in terms of sectors, but company specific as well, do you think any of these will be outperforming in the next 3 to 5 years? What's your big bet?
Yeah, I mean, it's asking a mother to pick between one of the 5 children who will do well. So it's tough to say. All of them are sunrise sectors and have been growing exponentially well. On the fintech side, we have 2 investments. One is a company called Small Case, which is into the wealth tech space, and second, Snapmint, which is into the buy now, pay later space. On the enterprise software, we have Edify, and on the consumer side, we have Astrotalk and Porter, right? So each of these companies have broadly been growing by about 45-50% year on year, and expect to see that kind of growth rate over the next 3 years. as well. All of them continue to stay profitable, and more importantly, are market leaders in their segment. So we have a fairly rigorous sort of a checklist to select and evaluate companies while investment. And some of them include companies being number one, number two in their category, profitable, and so on and so forth. So basis this, we've made these 5 investments, and fairly excited not only about these 5, but also on the pipeline to come, which has been fairly robust and probably the best pipeline that I've seen after starting Elev8.
Right, Naveen. In fact, one of the spaces, interestingly, that you have invested into is AstroTalk, which is an astrology-based segment. Why does the astrology segment seem attractive to you at this moment, given the time that technology is taking giant strides, semiconductor segment that is booming? Why astrology as a segment per se?
Yeah, it's a fairly large market. So one of our themes for investment is to look at large offline markets, which is going online, right? There are quite a few studies which have shown astrology ends up being like a $10 to $12 billion market in India, and it's completely offline. Online is just 2%, with AstroTalk having close to 80% market share. And that segment is sort of continuing to grow, right? Furthermore, strong levers in the business, which includes expansion within India, getting into some of the southern states, expansion globally. They've recently launched Astro Mall, which is their web store, which has been growing, almost 2x on a month-on-month basis. So some of these, the fundamental thesis of it being a large market, leader in the category, significant portion growing online, and multiple other levers for growth is what encourage us to invest in AstroTalk.
Right, Naveen. Let me also ask you about the current macroeconomic environment and global market and, of course, trade volatility. How are you positioning your fund to manage risks?
So our thesis of investing into companies are more fundamental in nature. Given private markets always trade at a discount to the public markets, and given this fund is till August 2032, so we have another 7 years for us. Our average holding periods is about 4 to 5 years. So IPO market will price our portfolio company at whatever they do. But fundamentally, the going in is that we want to hold this company for each of these companies for as long as we can, right? And given growth rates have been fairly strong for the portfolio, as I said, anticipating 40 to 50% growth rate for the next 3 years for each of the portfolio companies, plus coming in at an attractive valuation, because that's how private markets value companies at. I think external volatility is a lesser bit of a challenge for us. Having said that, I think it's just a very good opportunity to deploy capital, right? Especially in the private segment, with global investors being not as active as they were 3 to 4 years, gives good opportunity for homegrown domestic fund managers like Elev8 to invest into some fairly attractive companies and at very good valuations.
That's a good point that you have made, Naveen, about the fact that dependence on external investors is reducing, and of course that puts the onus on domestic investors like yourselves. But what challenges do you foresee for startups and investors over the next 12 to 18 months, given the fact that funding, although it may have picked up, although the funding winter may have evaporated, however, there is still some caution that persists in the ecosystem?
Yeah, I think I would look at it extremely positively in terms of the caution that's come in the ecosystem. I think we are in one of the most rational markets on the private side that I would have seen in my career, right? The race for number one, number two has gone significantly because capital has dried up significantly in the private sector, which is why most companies are now focusing towards getting to profitable, right? And what's more impressive, the anticipation would have been, if companies are looking at profitability, the growth will vanish. But no, we've seen companies grow at a very healthy rate, even while being profitable, and continue to grow in different verticals, right? I mean, that's the opportunity that India possesses for companies which are sort of grown in India. The focus for us continues to be Indian founders solving for the Indian opportunity as a base case. And if, of course, there is opportunities to expand globally, including Asia and US, that's always on a cherry on the icing, right? So from some of these aspects, fairly bullish on the current environment in India, and sometimes lack of capital for private companies is always good, right? I mean, we in our portfolio have companies which have gone through
Right.
a near death experience over a period of time. I think that makes the founders extremely resilient, strong, perseverant, and now they are looking to build the business for the next
Absolutely.
10, 15, 20 years, right? And not just a quick flip, get to or sell the company and move on, or get to an IPO and move on, right? So I
Absolutely.
think we're seeing far more resilient founders than I would have seen ever.
Absolutely. And of course, all of that is reflecting in the valuation of these companies as well, even as investors are focusing on profitability. And about the opportunity, Naveen, like you stated, while there is plenty of opportunity in India, remains to be seen, how capital is sort of generated from domestic investors, given that risk capital has been one of the concerns that founders over and over again have sounded the government off about. Well, on that note, thank you very much for taking the time out and speaking to us here on ET Now. Thanks very much once again for taking the time out.
Thank you so much, Sumita. Thank you for your time.
All right, ladies and gentlemen, let's now move on to some news that's coming in, especially as far as the group of ministers meeting pertaining to GST is concerned. And sources tell us that a group of ministers has recommended hiking GST on high-end EVs to about 18% from the current 5%. The kind of ramifications it's going to have on the EV ecosystem, that remains to be seen. But for the moment, let's go across to my colleague Prakash Priyadarshi, who's getting us more details on that crucial story. Prakash, what else are you picking up so far as increasing GST on EVs is concerned?
GOM on rate rationalization has proposed a hike in GST on high-end cars, EV cars, essentially priced between rupees 20 lakh to 40 lakh, from 5% to 18%. This recommendation is part of the proposal made by the GOM, which comprises state governments. But at the same time, we need to understand the fact of sources are indicating that the central government has not recommended a hike in GST on EV cars. In fact, hike in GST on EV cars is not part of the central government's proposal. And therefore, sources also indicating that the proposal is unlikely to be approved by the GST Council, since the Council has already approved the central proposal for two-rated structure, essentially 5% and 18%, and it has also approved doing away with the 12% and 28% slab. Let's see how it pans out, but at this point of time, there is no such proposal which has been made by the central government. However, the final call has to be taken by the GST Council itself, which is scheduled to meet on September 3 and 4.
Absolutely, Prakash. The final call is yet to be taken, but that's essentially what your sources are suggesting, that big news coming in on the EV ecosystem. It remains to be seen whether that gets passed and how does that impact overall funding and interest and adoption of EVs in the country. But ladies and gentlemen, this morning, the Prime Minister held a roundtable with global CEOs on the sidelines of Semicon India 2025 here in the national capital. The discussions focused on boosting India's semiconductor ecosystem with special emphasis on fabs, advanced packaging, AI, R&D, and smart manufacturing. In fact, the three-day event is seeing participation from over 20,000 attendees, including 2,500 delegates from at least 40 to 50 countries, and of course, comprises of 150 speakers, all in all. And in fact, the Prime Minister just yesterday, while addressing all of these delegates from several countries, at least 40 to 50 countries, spoke about how the semiconductor ecosystem or chips will be the new digital diamonds. And he said that even though the industry is looking at touching that $1 trillion mark by the next 10 years, in the next 10 years, India will hold a special space. India will hold a special chunk of that. And of course, he was inviting investments from other countries, considering India has largely been considered as a trusted geographies. In fact, at the Semicon event, Tata Electronics CEO and MD Randhir Thakur spoke on India's growing role in the semiconductor ecosystem. And here's what he said.